Let's get into your market picture now. And Asian stocks fell on Thursday as investors in most countries wound down going into that long Easter break with positive comments on the China-US trade talks and healthy Chinese growth, unable, however, to fire buying activity. Donald Trump's key trade negotiator is reportedly preparing to visit Beijing at the end of the month for another round of top-level talks aimed at ending the long-running tariff spat. It's all red ahead of the Easter weekend, with Tokyo's Nikkei dipping 0.8% there to 22,090 points. The Hang Seng also around 0.5% lower, 29,963 points. 3,250 points there for the Shanghai Composite. That's down 0.4%. Over in the United States, stocks ended slightly low on Wednesday, and that comes as a drop in healthcare shares overshadowed what was a string of positive corporate earnings and upbeat economic data from the likes of the United States and China. Now, all three major indices in the US ended the session in negative territory, with the S&P 500 remaining just within a percent below its record high reached in September. The healthcare sector saw its biggest percentage drop in 4 months, falling 2.9% on regulatory worries for the most part. Dow Jones Industrial inched lower, 26,449. S&P 500 losing 0.25%, 2,900. And just below 8,000 is where the Nasdaq Composite ended at close of trade. I'll take a look at how things fare across Europe, particularly at this point in time. It's a sense of positivity coming through on that board. And as you can see, the FTSE out in London as well, doing relatively well. So despite the lack of impetus coming through from the market, it does seem that there is some sense of positivity that could filter through for the other markets as well. But there isn't any fresh news. Some business surveys indeed are expected to come out of Europe as well. Earlier on, Japan reported some good data as well, but not enough to buoy the markets out in the Far East, but certainly doing a little bit as well out in Europe. The DAX and the CAC ensuring that they go into the Easter weekend on a slightly more positive note. So we continue with that market picture and we go on to the next set of numbers as well. And you'll see that some positivity as well filters through with the JSE. Yes, the all shares only marginally high at this point in time, despite a lack of impetus there. The industrials seem to be the ones that are pushing that market a little bit higher, despite the likes of Naspers. It's not necessarily going in any particular direction, mostly sideways trading across the day. Those banking stocks not doing too well. So we continue to unpack this picture, and you'll see also again more positivity coming through with regards to the resource counters, which were down quite heavily yesterday. A lot more of those miners, the likes of Kumba Iron Ore, falling around 5% by close of trade, but today slightly better. Gold stocks on the up, but platinum counters not doing too well. Let's shift our attention then to that commodities picture now. As you'll see, price of gold going up to $1,277 a fine ounce. Platinum off those highs of around $900 a fine ounce as well. And the price of Brent crude had reached $72 a barrel, which was its highest mark this year, 2019. But now it seems to be headed a whole lot lower. And hopefully it continues on that downward trajectory. That's just for our sake, right? Hopefully that number doesn't increase the petrol price. And then very finally, just a quick look at those currencies as well. Then you also see that the Rand has unfortunately gone weaker. 14 Rand 10 against the US dollar. It's 18.33 for a British pound, and the euro at 15 Rand 86. So that market picture itself certainly not helping things across the pond here in South Africa and even out in London as well. So let's see how things are faring and what is it that is actually pushing these markets. Chantel Marks from FNB Wealth and Investment joins us live from the Johannesburg Stock Exchange. Chantel, thank you so much and good afternoon to you. Only marginal gains for the JSE, but the rest of the world not really sure where things hover. It's mostly sideways trade. Do you think you have what it takes to change the market's direction ahead of Easter?
Yeah, I mean, it's been quite an interesting one because earlier this morning I was thinking that 60,000 points on the JSE was just a distant dream. But after or just before midday, at least, the market received some support. And what's quite interesting is exactly where those pockets of support came from. So we had the weaker Rand supporting some of the larger cap Rand hedge shares, which mostly have offshore exposure, and also providing some support to some of the mining mining companies. But then interestingly, some of the SA Inc. shares did well, and some of these shares usually perform poorly when the rand is weaker. And I'm thinking in particular retailers and banks. And it seems as if there's some sort of positivity coming through from foreigners in terms of the South Africa story and the possibility of reform playing out post the May 8th elections. So definitely a bit of positivity coming into the market there. We can actually see that foreign buying has started picking up in the equity market and in the bond market. So perhaps that's why we're a little bit out of kilter with the rest of the world.
And I suppose that isn't necessarily how things will be on a sustainable or more long-term basis, shall we say, but it is one where you'll note that the Chinese data which came out was a little bit more positive. It does bring a sense of positivity to the global market as well. Do you think that we'll take on that mantle perhaps and run with it, or will the elections sort of begin playing their part as we're less than 3 weeks away from that?
Well, I mean, the election is certainly a risk point, or a point of risk for us to be very aware of. Who knows what foreigners are expecting and what they're actually looking out for. And from an investment perspective, there has been a lot of inconsistency in what the market would deem a market-friendly election outcome. But certainly anything that leads to potential reform in South Africa would be regarded as positive, and that could have a longer-term sustainable positive impact. For now, it seems as if South Africa is benefiting from the hope of reform. It's also benefiting from the fact that the market looks a little bit cheaper relative to other emerging markets. And then, of course, better data out of China is also helping matters, because that would support commodity prices, which in turn is very positive for us as an economy, as well as the miners listed on the JSE.
Yeah, but none of that seems to be something that the Reserve Bank sees any hope of, really. They say with load shedding coming on board, or having been on board, and perhaps having the risk of that continue this year, we may get no growth, and we may still lose around 100,000 jobs. And that is despite inflation yesterday also coming through for the month of March at lower than expected.
Yeah, there's a bit of a disconnect at this point in time between the South African stock market and what we expect for growth in the South African stock market relative to the real economy. And that's just because of kind of massive distortions in terms of what is listed and what is actually happening on the ground in South Africa. The Reserve Bank is quite negative or quite measured in their approach, at least when it comes to demand. And I think that they are thinking about the inflation picture and what weak domestic demand might mean for inflation. But when we look at what the Reserve Bank is thinking in terms of economic growth and what is reflected in share prices, the near term is to an extent reflected in share prices, but what really happens when you look at the stock market is it aims to almost price in what's expected to happen over the next 2, 3, 4, 5 years. So longer term, it seems as if investors and the market is reflecting a more positive picture, but certainly near term the risks are quite high. I take their point that load shedding is a huge risk, and we probably will see that coming through in economic growth numbers due out in May for the first quarter of 2019. If we see a resumption of load shedding conditions, that will have a further negative impact on economic growth for South Africa. But I mean, on the positive side, if growth is exceptionally weak and inflation remains under wraps, we might just see a rate cut on the cards this year. So that would be, I guess, the only positive thing to take out of it.
Oh, look, we'll take it. It's exactly what we're looking for in this day and this time, of course. It's definitely a tough one when one considers just how things fare. But that oil price as well has been quite significant. One takes a look at the rand against that oil price, or against the dollar rather, 14 rand 10, 14.09 or so. We expected some sense of positivity, but that not coming through because of volumes as well. That oil price having hit a 2019 high of around $72 a barrel, now coming off a little bit. Do you see that perhaps weakening even further, or is there a little bit more strength in that oil price?
Well, it's very difficult to say because the oil price is very much dependent on kind of rhetoric from Saudi Arabia, from the oil producers, global oil producers, uncertainty around the kind of geopolitical situation, both in Iran as well as in Libya. And then also it is to some extent also dependent on Donald Trump's Twitter timeline. So it's very difficult to say. It does seem toppish at the moment, but it could show kind of further strength if last year is anything to go on. From a South African perspective, we would hope that it remains under wraps, so that inflation, at least from a headline perspective, remains under wraps. We think that core inflation will probably remain subdued despite an increase in the headline number and despite an increase in fuel prices, just mainly because demand is so weak. So that transition impact really isn't there at the moment.
Yeah. Chantel, enjoy your Easter weekend. We'll chat to you again very soon. Thank you so much for the time there. Chantel Marks is from FNB Wealth and Investment. Just quickly, let's touch on that currency picture as we noted a little bit earlier. That rand hitting 14 rand 10 or 14.09 or so against the US dollar. Yes, some distinct weakness coming through, but let's remember, not too much with regards to volumes. Investors perhaps choosing to stay on the sidelines more ahead of the Easter weekend and rather choosing that they'll shore up some of their positions heading into next week a little bit later on and perhaps only enter the market again on Tuesday. So volumes across the globe perhaps not looking as bright as one would have hoped. 18.33 against that British pound and 15.86 for a euro. Of course, the significance of both of those is just what happens out in Brexit as well. That will certainly tell the picture. For now, that is where the buck stops. Please do enjoy your Easter weekend and be safe out on South Africa's roads, please. And do arrive alive as well. But for me, that's where the buck stops. It's back to Nzinga.